Hello, everyone. I will speak in English, but my panelists have been encouraged to speak in French, but it is their choice. So when we think about financial inclusion and we think about the impact of FinTech over the last decade, we have to start with numbers, and we have to start with definitions. When we think about what inclusion means, it should mean more than just having a bank account. It should mean financial wellness. It should mean having complete access to everything that should make you thrive, make your families thrive, and make your businesses thrive. And when we think about the 7.5 billion people that are on the planet and all the different interactions they have personally and professionally and with business, I would say that the majority of us are not completely banked. But the numbers are encouraging. And so this is what I wanted to get different perspectives on from people that have been in banking, people that are consultants, people from academia. Because the good news is this. There are 1.7 billion people on this planet that are truly unbanked today. They have no access to any type of bank account, any payment, any credit, any access to any part of the formal system of financial services. But that number has come down significantly. In the last 6 years, every single year, 100 million more people have access to banking through payments and credit and other services and are becoming more fully banked. 1.7 billion people, that's 22% of the population of the globe. And within our lifetimes, there is a very strong chance that every single person will have access. But as we will talk about today, access is not enough. So I wanted to start and talk about what both financial inclusion means, not just for individuals, but for businesses, and how companies should be looking at this problem. So I'm going to start out with Landry. When you think about the financial services model and where we are and what you're doing at Innogence, let's talk a little bit about what the past decade has meant and what your company is doing to include more people, and what does inclusion mean to you?
Okay, thank you, Bradley. Financial inclusion, you use the word access, right? When we talk about fintech in Europe or in the US, most of the time we're talking about gaining efficiency. I mean, how do I aggregate my cards? How do I better display my savings or my deposit account? When we're looking at Africa, which is a continent where I spend 80% of my time, we are mainly talking about access. We are mainly talking about people who have never ever had access to any financial account. And for most of them, they encountered something called mobile money. And mobile money, for those who might not know, it is the ability by telcos offering to its customers possibility to store money on their mobile phone, which can be considered something like kind of paper wallet, but completely stored on the phone, which is accessed via USSD. You know, the classic star, 123 star, blah, blah, blah. So this is something that started in Africa like 10 years ago. To give some figures, today we have more than 400 million mobile money accounts just in sub-Saharan Africa, which is almost more than 3 times the number of bank accounts on the continent. So for sure, these telcos are doing not just an evolution, but a revolution on the African continent. And this is mostly pushed by telcos. But in the same time, we just can't limit financial inclusion to just access to a storage account, to a classic wallet. To really bridge the financial inclusion gap, we need to offer services like you were saying, savings, credit, investment. How can the money stored be productive? How can it generate sufficient income or more income to the person who is storing the money? So this is something happening. And today, with Innogence, we are helping big corporates in Africa design financial services suitable for customers, especially for bottom of the pyramid. Because most traditional banks that were in Africa were serving like high net worth individuals. And today they are faced with a need to broaden their deposit. And now they are trying to understand that telcos are already being able to aggregate deposits. And they're like, how can we also participate in this game. So we have been working with banks, with telcos, also with insurers, on how can we design suitable services to address the bottom of the pyramid, which represent most part of the unbanked on the continent.
So when I was talking a little bit earlier with Landry, I discovered that his background is actually in nuclear energy, and discovered the need for financial services and sort of broadening more than access, because he saw the need for people to have not just access to financial services, but access to basic needs like power. And so when we think about broadening financial services, we must think again about not just the basic elements of what banking is. To his point, it's not just access, it's not just a wallet. So moving from that and moving to another part of the economy and the way that money moves. Stella, you actually have a background in both trade and capital at banks, at Barclays and BNP Paribas and Ecobank and Pan-African Ecobank, and now you founded Talenton Consulting Group. Can you tell us a little bit more about what you do and what your company does to sort of work within including more and more people and businesses?
Okay, so thank you. So in fact, having gathered all this time by banks and now having found this Talent and Consulting Group, my first partner is a FinTech, helping most of companies. So it could be SME, it could be multinational companies also, having this high access of monitoring financial services. This part which is not interesting for banks, or which is just now coming interesting for banks, which is monitoring these services. So specifically regarding international trade financing tools, commitments have to be monitored by companies, because we speak about a lot of money, and the risk of these commitments, if it's not well monitored by the company, to be not realized. Okay, so with this FinTech, we have been trying to help these companies monitoring this access to different banks, and also monitoring so how the life cycle of these commitments of these products could be well managed. Most of the time these companies, they work with many banks. Most of the time these companies are working also with many countries, so which involve so monitoring many parts, many subsidiaries having the same kind of commitments. So it represents a lot of time, a lot of organization also. And so this FinTech is putting some solution above the financing solution already existing. And we found, so this last year, that also banks were now very interested in jumping into this part of a client service. So they are now finding that there is a lot of interest being involved themselves into this part of helping companies well monitoring these tools. So we had a lot of contribution of the International Chamber of Commerce, having in fact settled new rules which are called bank payment order, and this is also facilitating the cooperation and communication between banks, and also has also enhanced bank jumping into this this part of services for companies.
So when we talked a little earlier, we talked about sort of the importance of FinTech in terms of speed, in terms of getting banks to work quicker. So going from sort of your experience from banks into FinTech, into one of the original FinTechs, maybe we say, this little company called PayPal. And Damien, you have an interesting quote here. You said, "The world is changing, the way money is spent is constantly changing, as is the way it is earned." which is a different way to sort of look at this inclusion angle. Things are much less frozen than before. So let's talk about what you mean by frozen, and what is PayPal's, in your view, on inclusion?
So, and it's great to be here. And I guess the first thing is we should always look at the glass half full. And I'm not saying that because we're in Bordeaux, but and I guess the glass being half full, it's the fact that people are connected in every part of the world because you have access through smartphone to a grid. And as Landry was saying, it's when you go to Africa and you see the power of mobile money and the impact on people through a smartphone, it's pretty impressive. And also, you need to acknowledge that there is no longer monopoly in terms of financial evolution and innovation. It's no longer a monopoly from incumbents. Anyone can innovate at scale, being telcos or being new entrants. And then the third thing, as you know, the session this morning, there is also a regulatory framework that are encouraging and fostering innovation. PSD2, open banking in Europe is a good example of that. But having said that, it's true that although FinTech, tech are no mass market, most of the journey is still ahead. For me, what I would like to record is you still have 80% plus of the payment taking place in cash. Even when you look at e-commerce, you still have only 10% of the consumer spending happening online. So you have like a massive opportunity in front of you. And I guess really to look at financial inclusion, yeah, we can look at Africa, but we need also to look at what's happening just here. I'm living in France, a country where you have like 1.7 billion checks written every year. I don't know if checks is very savvy in terms of.
You can't talk to an American about checks.
No, where you still have cash. So and so there is so much that we can do. And I guess for us as PayPal, what we think about is really. There was this notion mentioned quite a lot in the last panels. It's not only about technology, but it's also about trust. You need not only to give the tools, but also you need to give the trust to people around the fact that it's money, it's a serious business, so everything is going to be right. The second, you need to give the tools of your platform to everybody, the large enterprises, but also the small companies, the startup, the entrepreneurs. And then also it's not just about payment. I guess access to credit, it's a big topic. And when I see and I guess Jim yesterday was mentioning that in his speech, PayPal Credit, we issued more than $50 billion of loans since we started, including 10 billion of loans to small businesses. And for them, being able to access to cash in a very fast, efficient, paperless way, it's a game changer to grow their business.
So I'm going to switch from FinTech and money movement and look at a larger macro view. And Ali, you come here from the business school. I want to put out another fact here really quick. The top 10 global banks in the world made $468 billion in profit last year and now control $46 trillion in assets. When we talk about inclusion, the majority of those assets are not trickling down. We're talking about that $46 trillion being a very small percentage of what truly could be included. From your view and looking sort of globally on inclusion, and again, I'm looking to you to speak French now because I was expecting more. Give us your view. What do you think about this topic?
Hello, everybody. I am a professor of finance in this school, and I'm going to tell you about my experience in microfinance in a national structure called ADI. And I wrote my PhD thesis on it, and that experience is what I want to talk about, and then also to move on to the question, Bradley's question on the role of the banks for financial inclusion. And I'm going to start by saying that inclusion, financial inclusion, is let's oppose it to exclusion, bank exclusion. And when we talk about that, it's exclusion from financial services of part of the European population. A lot of people don't have access. 38% are excluded from services in our country. 38% of people across the world don't have access to bank accounts. In France, you're allowed to have an account, but you can't be excluded from opening a bank account. You can't be completely excluded from the financial system, but you can be excluded because you won't be given a loan. Exclusion factors are multiple, and it depends on the context of the institutions in the country in question. There are three main reasons, or four. Inaccessibility, that is to say, we don't have enough agencies and some branches in some countries, and the rurality as well in the countryside. And then there are the cost of the transactions, which are high, interest rates of 28% for microfinances. That's too high in some countries when there's negative rates in some banks. And comparing this to Africa, and the Mediterranean basin, there are loans at 3% at the moment. So it's access through to this phenomenon. There's other exclusion. There are psychological factors which push them out of the system, and they think, well, this is not for me. So those are those factors. And I'll come back to when I started. At the beginning of around the year 2000, we learned about Grameen Bank, and this is from about the 80s and 89. Baron Novak, working in the French Development Agency, and said, why don't we import innovation from the south to the north? And microfunding was introduced in France, and through this we disseminated this experience into other European countries. So all of the countries from the south are the countries in the north as well. And at that time, in terms of exclusion, to confront this phenomenon, we weren't looking for just one banking actor. We needed cooperation between banks, the classic banks, given certain regulations. And the first confrontation is, how can we have this happen in France? Because it wasn't possible at that time. So we had to set up an application, and then the application is sent into the bank, and then there's a question of guarantees, and you can imagine how much time that took. About 45 days on average. And now we have clients who are changing their behavior and who want instantaneous loans and immediate response. So you can 50% of people who create companies in France are unemployed. 45 days is too long for them. So we waited until 2003, until some of these instant loans were authorized, where you could borrow, and companies could borrow from banks to lend, and then they were lending. And so they had a role. It was a question of social responsibility. The banks here signed conventions to facilitate the introduction of this new practice. And I can answer your question by saying, why are banks not making these loans? Well, because it's a question of the cost of the transaction. The association takes on the cost, the administrative cost, and about, on average, 850 euros for the average loan. And there, in fact, these experiences, we're talking about insertion into economic activity. So it's a question of the common interest and the common good. So the government has to intervene and to make microcredits easier to to make. I'm sure I've forgotten some elements of what I wanted to say. Yes, perhaps. In terms of the responsibility of society's responsibility, we have banks who finance and accompany people who have projects, because it's not enough just to give money. These people need to be supported by accountants, managers. What is a company? What is the legal framework that you need? What is your market? How do you define your trading policy? They need advice, and we call those microcredits or accompanied financial services, and the accompaniment is extremely important, the support that is offered through that, so that they can go into the future in the best conditions.
So we have about 15 minutes, and I've got many questions that I'd like to ask, but I'm going to put it in this context. The World Bank has said that banking the underbanked or the unbanked is a $380 billion opportunity. And in all of the conversations that I had with panelists right before we came on, there's this idea that it's not just those that don't have access today. It's the majority of people that are underbanked, because I think that there's no sort of perfect system unless you have true wealth. And so when we think about sort of the basic building blocks of financial inclusion, we look at the ability to have access as simply the entry point. There are a lot of other technologies that have changed the game in the last 10 years and will continue to. From artificial intelligence and machine learning, open banking, and this sort of platformification of services that are able to deliver banking beyond access. So since we've got 10, 11 minutes, and I want to open it up if anybody has any questions, give me your view on how technology is changing the space that you're in and how you see inclusion becoming more than just a story of access, if that makes sense. So perspectives, let's start here and just go down.
Yeah, so for me, like very personal statement, but I don't believe you can command and control technology. I guess you need also to let it happen. I was in Dakar in April, and mobile money is very impressive, but for me also in Africa, the use of social medias to enable commerce is quite amazing. When you see commerce platform happening on WhatsApp, Instagram, etc. And for me, that was reminding me also beginning of e-commerce, some of our market where the first winning formats were classified, Craigslist, eBay, Le Bon Coin in France, etc. And so for me, it's great also to assume that people are smart. We need to trust people, and if you give them tools, they are going to embrace them and going to create new use cases and formats. Obviously, when you talk about payment, fintech is regulated. You need to be very serious about it, and you need to work hand in hand with regulator. But I guess it's hard to say command and control, because also you need to be future-proof, because you don't know what exactly is going to happen. And if you look ahead, we meet in 3 years. It will be 5G everywhere. We'll not have any more one connected device per person. We'll have like 3, 4, 5. There will be an explosion of data, because data that we're creating through all those use cases, but also because there is regulation fostering data exchange. And so term that we're using today, blockchain, AI, as bit forward-looking, will be very much the day-to-day of the activities. So I guess for me, in summary, it's we need to believe that technology is good, and it's not just about command and control, but really enabling new use cases and trusting people.
Tim. Sorry, Landry.
So, yeah, I think technology is changing the way people are being financially included today in Africa. You were talking about AI and machine learning. One of the biggest issue in the financial space in Africa is a gap in funding, whether it be for individuals or for SMEs particularly. And why this? Because when you go to a bank to have access to credit, they will ask you traditional data. What is your cash flow, especially when you're a company and blah, blah, blah. So many fintechs now on the African continent are emerging and using alternative data to be able to bridge this gap. And we have seen like tremendous change in the way people are able today to access to funding and be able to fund their businesses, like to fund first their personal needs, but also create businesses on top of this funding being made easy. So I think, sure, technology is going to play a big role in the near future on the way people are being financially included. But at the end of the day also, and I'm very, okay, what was saying Damien, at the end of the day, we got to trust the customer. We have to build services hand in hand with the customers and seeing what do they need and where do they want to go. If not, we are going to be stuck in kind of cliche services. Everyone wanting to do payment while there is a huge array of services being left behind.
Stella.
When listening to that, it remembered me about one case we had regarding airtime. Okay, so when I used to be by EcoBank, and we had a committee, and we were thinking, okay, models are changing. Okay, so we have to figure out so how finance could adapt these models, because that's the need. Okay, so we cannot stick only on traditional finance, but we have also to think at so how financing models could be adapted to these new models. So at that time, so airtime was very difficult for us to define. So during this bank committee, and it was the point. So all people said, okay, we have to adapt. That's tough, but we have to adapt. And I think that FinTech are so these partners, so finding an accelerated way for adapting these new models.
Yes, digitalization is a plus, I think, for two reasons. I'll take two examples. The mobile actors, for example, for microfinance, for one reason, and that is that it brings down the costs. So we have scaled savings, and giving a loan, you can meet a digital partner. You can do that with a digital partner, but it takes time, and so we have to base this on digital solutions, and that brings down the costs. And for me, digitalization, and we have to try and be in contact with the greatest number of people possible, supported by digital technologies. But that doesn't. But we also still have to have physical contact. We also have to meet with people. We have to have actual physical agencies that exist where people can go, get advice, find solutions, and make their applications and ask for advice actually in person. So there's a complementarity between the two means of access.
So moving beyond then the technology discussion around access and around sort of where we're going next, we talk about unbanked and underbanked as if it's something that is like a disease that we could throw money at, or we can, simply tap into a market. But this market of people that are affected by not having equal access is impacting some people more than others. It's geographically impacting certain continents more than others. It's impacting women more than men. It's impacting the poor more than those that have had access for generations to more and more financial services. It's impacting immigrants or migrants that, to your point, Landry, don't have access to data that extends their credit history. If you had the ability to tell some of the largest financial institutions or players in the world, one thing about how they could change their business model, and yes, I'm throwing you guys a little bit of a curveball to wrap it up. Think about the biggest couple financial institutions where you are. whether it be in France or other places that you've been in, what would you say to them to make them think differently about either the profitability model of banking or in a way that they could think about serving more and serving actual more needs than what they're doing today? Because we've agreed, I think, that access isn't enough to make people thrive. So you want to start? Ali, you want to, like, who wants to jump in here? Oh, you guys are scared of this question. So BNP Paribas, one of your old bosses, you know, what would you say to them? No pressure.
Yes, I would say to them, look at what emerging markets have been trying to do, right? So I had this chance also to gather other experience, specifically by EcoBank. So acceleration is key. So when you have those high need, sending money over the world, and it needs to be done very, very easily. So think at or look at what some banks have been trying to succeed in. So like EcoBank did regarding this money transfer. So it's trustful, it's rapid, and it's adapted. Okay. So all people are not able to read easily. All people are not able to have access to this education, but so each people need, in fact, to be very effective in terms of reaching some needs for which the money is needed. And this acceleration tools banks like EcoBank have put in place are things, I think, success, and maybe some too big to fail bank could also have a look at this kind of a product which are really success. So money transferring, so transferring money from 1 second to another using the mobile code and going to an ATM and taking this cash directly. So there are some TV spots explaining that very, very, very smart. It's something which could be looked at. So.
Quickly.
You know, there is something that is quite amazing is any of the most successful company at the moment, and again, referring to what Jim was saying yesterday, yes, some of them are technology company, but they all define themselves as a customer-centered company. And I guess, you know, it's very hard to solve very serious society or world problem if you just look at your own interest and you don't put customer at the center. And I guess, you know, this is the first thing that you need to do is really to put the customer at the center. And what is very amazing about FinTech and new players, they really put customer at the center. For instance, you were talking about banking migrants. PayPal, we just invested in neobanks called Moniz, which is very much, you know, providing light bank tools to migrants coming to Europe. So people who don't have like an address, don't have like an electricity bill to open a bank account, and really, you know, they really try to crack those problems and always, you know, having this outside-in customer-centered view. So that's first one. Second thing, you know, FinTech innovation, yeah, they need money, they need capital, but also they need good partners. And, you know, we need to collaborate more in the industries. And again, there was like a very good session this morning regarding open banking APIs. Is, you know, we all need, you know, to comply to those regulatory framework because, you know, it's not one person who's going to solve everything. It's like it's an industry-wide approach, and in order to tackle that, you know, we need to collaborate. And I guess, you know, there is a need for more partnership around that. And then the third thing is you need to have the belief that technology is going to make you more successful. Just going to take two examples. PayPal, we process over 25 million transactions per day on a closed-loop network. It's very hard to do that if you don't have, you know, machine learning, algorithm, AI. Impossible, because we don't have a physical network, and still we are regulated as a bank in Europe, so we have also all the banking obligation. And taking the example, it's hard, you know, if you want to give a credit of 3,000 euro and half of that is a cost because of your cost structure, you need to believe that technology is going also to enable you to lower your cost and also to serve population that historically it was very hard to do because of your cost structure and the lack of technology to do that.
Any final thoughts, Landry Halle? Quickly.
I'm not sure we will be ever able to include everyone because it will be very complicated as per the business model, because serving everyone means for the financial institution be able to distribute its services at a reasonable cost. And when we precisely look at places in the world where we have high level of financial exclusion, like Africa again, it is very complicated for two things. First, regulation. When we talk about mobile, any digital financial services, in most African countries it's regulated by, they have two regulators, financial regulator and communication regulator. And most of the time they don't really work hand in hand. And at some point you have they go head against the other. Like if I have to give a specific example, in ECOWAS, French-speaking West Africa, where we are working with Société Générale, which is the biggest Western bank in the continent. And they're having this dilemma where the financial regulator tells them, okay, you can open a bank account with no KYC so far as the customer transacts less than 300 euros per month. When you go in country, the communications regulator tells you don't have to open any SIM card. You don't give any SIM card to anyone without the person being completely identified. So they are faced with a challenge. The mobile money account is linked to the SIM card, to the person's phone number. So the financial regulator says you can transact freely, so far as less than $300 per month without any KYC. But in the meantime, you can't open any bank account. You can't open any SIM card without KYC. And the truth is, the average transaction for mobile money in the monetary zone is $20 per month. So if you have to look at it keenly, you don't need any KYC for most of the customers. And in these countries, most of the people don't have any ID. This is truth. 60% of people in the Sahel region don't have any ID. So if you really want to include these people, we need to think also about the regulation. How do we draft a regulation that is suitable for everyone? Second thing is, he was talking about collaboration. I think it's key. I mean, banks are banks, right? Not very agile. So I think startups have this for them, that they are able to design business models to address the last mile. What banks will find it difficult, especially in places like Africa, where cost structure is very high. I mean, you don't have bank agencies at every corner of the street, even where you're in a remote village, like you can have in France, for example. I mean, 80% of bank agencies in Africa are concentrated in urban areas. When you go outside big cities, you don't have any bank accounts. You don't have any bank agency. So you need to, what they have been doing is they have been leveraging what they call agency networks. So these are shops which are able now to serve customers. They are delivering financial services, things like cash in, cash out on their wallets. But the thing is, these people are offering these services as something more to their usual activity. It can be like a grocery shop. So if they are not sufficiently incentivized, they will not serve the customer rightly. And if you want to be a customer-centric company, and the people delivering your service at the last mile are not customer-centric, I mean, all of your case is just bull. So I think the collaboration is going to help in this case. So for me, it's collaboration and regulation can help push a little bit forward.
To give another example of a possible collaboration between FinTech and loan services, in some countries where financial autonomy is linked to the access and flexibility, we could have examples of crowdfunding facilitating the conception of the creation of projects, and the funder themselves will use this crowdfunding to finance structures that would be able to also provide financial services. It's an example of FinTech improving economic development, and economic development in return favoring FinTech. So I believe that it's a very broad question, but having a local bank investing in real economy is not just about cost effectiveness or stock exchange, but focusing on real economy. It's a social responsibility, not just focusing on savings or transactions, cash in or cash out, rather showing the number of companies that have been created on a given territory, the number of jobs created. These are economic criteria to enhance this kind of solutions and reduce the finance exclusion.
So we are at time, and I will end with this note. I think in the past decade, through technology and through the way that I look at FinTech has sort of been the tail that has wagged the dog, and I don't know how you would say that in French, but the business model has been turned upside down, and I think that what we focus on at Unconventional Ventures is this idea that there is hope, that we must include more voices in this conversation. And for those of you in the room that are thinking about going into finance and banking or involved in it, we have to question an industry that has, like my former bank, a billionaire at the head of it, and has a certain level of salaries and profit that should be questioned, because that in itself needs to change. And this is what I think the story of FinTech is that technology has a way of leveling things, that the economy has a way of being balanced by something that can serve millions to billions across a platform. So this is a story of hope. I thank you all for sharing your views, and thank you for listening to us today. Thank you so much.